Saturday, December 31st, 2:51 p.m. New York time. Do the year-end review of commodities. Commodities, there's several categories. I'm going to go over the energy category, the metal category, and the agricultural category, or some people call it the ag. In the ag community, you have grain products and you have the livestock, so that's even broken down more. The two big commodities in the energy category, crude oil and natural gas. Those two I'll be going first. The chart will represent a year, beginning of this year to the last trading day of this year. We're looking at crude oil first here on the left and natural gas on the right. We're looking from here, V pattern on crude oil, where natural gas had several V patterns. Opening here on the crude oil, beginning of the year, the high of the year, $130.50 a barrel. The lower year, $70.08 a barrel. Huge trading range, unbelievable, amazing. Yeah, and there's people still saying publicly in media that gas is at all-time high. But they're not showing the history of the charts to document that, to support that. They're also not showing that gasoline has taxes in it, so it's different at different prices. Yep, different states have different price ranges, tax levels on gas. They'd be better off if they were more transparent. So I'm showing you here what leads into gas is crude oil worldwide. Yeah. So looking here, crude oil, we're much closer to the low of the year than the high of the year, where the media is talking about gas prices and saying we're much closer to the highs, but they're not showing what the range is, what they're comparing it with. Very shady. And that's the media to the left and the right. Shame on both those knuckleheads. For the last week of the year, we made a higher high, higher low. We're struggling at its $80 range. These were showing distribution, huge impulse move down, retracement. So we may not have much higher to go until we roll over again. Natural gas, there's the low for the year. Here's the high for the year. The high, $10 and 0.28 cents. Look at the last week of the trading year. Lower high, lower low. Much closer to the low of the year. I'm going to put these on a 10-year time frame. Both of them. If your power station, your utility company, is using fossil fuels, majority of it is using, well, I should mention here too that the number one energy source worldwide is coal. More coal is used. It's the dirtiest of all fossil fuels, followed by crude oil, natural gas. In the United States, the majority of energy used in the United States is from coal, the cheapest, dirtiest fossil fuel. Near your power plants. It's all public information. Yep, dirty. Causes the most cancer. So if you're afraid of nuclear power, well, you should be including how many people die year to date from fossil fuels, either producing it to get it to you or secondary. Yeah, not, again, it's not, the nuclear is not the number one cause of death. It's the dirty fossil fuels. If you're using your power plant, your city is using, or your community is using these energy sources, these fossil fuels, you wonder why your utility bills are higher, because again, these commodities fluctuate hugely. First, they have to be imported to your community. Your backyard is not growing crude oil. Your backyard is not growing coal, natural gas, regardless if they're being imported from the Gulf of Mexico, Canada, United States. They're not made on site. It's not produced on site. So many embedded costs are involved in it. Nuclear power, produced on site, and typically has a lower fee per wattage. You can check on that. Crude, the past 10 years, There's the range. The low, of course, during the virus. The high this year, that spike. The current trend is down. Looking at natural gas, past 10 years, a lot of whipsaw this year, but we're much closer to the lows now. Got it? Remember, all commodities are priced in the US dollar. That has a big effect on it too. Let's go into the metals now. Yep, look at the metals. Another category I mentioned, the metals. The big parts of metals are gold, number one, silver, platinum, or is it palladium, and copper. Gold is more used for the storage, the wealth. Silver has industrial use. Platinum, copper has huge industrial use from your appliances. Huge. Yep. So again, they're all metals, but they have different importance of usages. Well, gold for the year, they reopened up. There was the high, $2,078.80. The low, $1,618. Notice here, massive consolidation, impulse move up. Looks like gold wants to go higher, but right now it's under distribution. Silver, opening of the year, high for the year, low for the year, strong trend up, trending better than gold, interesting. But again, there's different usages for them. So there's different reasons why they move. Not just based on the underlying of dollar, it's demand and supply. Platinum, opening of the year, high for the year, low for the year. Yeah, look at that. New high for the week, broke above this consolidation. So there's accumulation. Smart money is buying these metals. And copper, opening of the year, high for the year, low for the year. Huge consolidation. Looks like it's under distribution. Let's put them on a monthly. Okay, we'll do 10 years. And I mentioned several times that 10 years would be more correlation with the 10-year US Treasury notes, because those are the most popular ones. And you get a good amount of history to see the 10 years. And what's the purpose of history? To learn from it. That's the importance, or that's the main part of history. So we know about history. It doesn't mean you're not going to repeat it again. That's the point of history, to learn from it. Well, look at the past 10 years of gold. Huge consolidation, tight trading range. Trending, it was trending. Another huge consolidation. Retracement. Trending back up, look at these double tops. Same with silver. Majority of these 10 years were in a tight consolidation. Deeper retracement, but again, the trend is up. It's much more defined than gold. And platinum, again, tight consolidation over all those years. Then a retracement. And again, exploding back up. Copper, less of a defined consolidation. There's more trending. And then that reverse retracement, double bottom. Strong up move, very well defined. This looks similar to gold. See this gold? Very defined. Consolidation, much more tight consolidation than gold. It looks like a steeper sell-off. And look at that. Inside candle for the last month. Interesting. Let's zoom in this. The candles of the last month. That's this month of December. Gold, higher high, higher low. Silver, higher high, higher low. Platinum, higher high, higher low. And copper, inside candle, small trading range. Very interesting. Maybe forming a bullish flag, or maybe getting ready to reverse and trend down. Very interesting. So again, if the dollar, what I showed in the other video, does that minor retracement higher, maybe I haven't used that word minor, just does that little retracement higher on that prior trend, then you're going to expect these commodities, metals, to go lower. Opportunity to reload at a lower price. Let's go into the next. The agricultural. The ags. Very little news coverage do these get. And when they do, it's just seconds. Shame on the mainstream media, not including the importance of commodities. First, we'll look at the grains. Corn, low of the year. Sorry, opening of the year, high of the year, low of the year. Now, we're about midpoint of the year. Yeah, trending up. Wheat, beginning of the year, high of the year, low of the year. It's much closer to the low of the year. Again, one of the biggest nations in the world to produce wheat, Ukraine. Ukraine. Also, either is the number one or one of the largest countries also produce sunflower seed oil. A lot of their products, of course, a lot of the Ukraine products get shipped to other European countries and Africa. So again, they have inflation, terrible. And soy, opening of the year, high of the year, low of the year. And the retracement puts about midpoint of the year. That's interesting. So let's look at these three here, the top three, which are, again, the grain products. Put them on a monthly for 10 years, get a better insight. Again, the bottom is live cattle, but we're focusing on the top right now. 10 years. In 10 years. There we go. Top three, 10 years. Again, corn. Let's open it up. Again, you can see clearly on the monthly. Each of these is again, it's 10 years and each candle is a month. Again, looks like it's grinding back up. That's corn on the monthly. Wheat, big difference. Yeah, it's at a prior retest in the bottom. And soybean grinding back up. More stable, it looks like some of these. But again, I want to expect these are going to continue going higher over time. Look at the live cattle now. Livestock. First one, live cattle. Opening of the year, low of the year, high of the year. We finished the year all-time new high for cattle. Again, live cattle. A lot of it is fed grain products, not naturally just letting it roam and eat grass. Some people, they raise them to feed corn. Corn is used for multiple things. Corn is also included in ethanol for the gas. What did corn look like here? Look at that. Huge demand. Huge demand. Population still growing. What was everybody doing during COVID? Reproducing, maybe. Population's growing. People are living longer. Is there enough to feed everybody? Sure there is. It's just some people choose how to get that product to where it needs a destination. Well, we're looking at feeder cattle. A lot of whipsaw here, nearing the high of the year. So opening the year, low of the year, high of the year. Big difference than live cattle. Again, feeder cattle is just like it says. They're slaughtering to feed it for the consumption purpose. And lean hog, opening the year, high of the year, low of the year. Huge trading range here too. And look at that. We're much closer to the bottom of the year. Let's put these in on the monthly. We'll finish that here. Again, the dollar goes lower after that retracement, maybe between now and the first 3-4 months of the year. We may see these commodities then start taking off higher because of that cheaper dollar and higher interest rates. What are you going to spend less money on? Live cattle or the seeds? Again, 10 years, live cattle. There's the high. Yep. So we're not at all-time high, as people have been misleading you to believe. Nope, live cattle is not at all-time high for the past 10 years. But it's trending up strong. Trend A to B, B to C the retracement, C to D, another extension. It might go past that. Feeder cattle, past 10 years, that was the high. We are not at the high. Nope. and lean hog. Again, we did not make a new high for the past 10 years. But looking at the last few years of these livestock products, yeah, the cattle close to the highs, lean hogs. Many thanks for watching. Thank you, as always, for spending just a little bit of your time with me. If you've gotten value from this video, if this was helpful, then please consider sharing a small monetary donation to my channel by going below and clicking on my PayPal or Venmo. You can leave a small tip. If you don't want to share financial support, no problem. Just click the like and subscribe and leave a comment, please.